A little boring today, but today has a lot to do with a series of economic reports today and tomorrow. So let me go ahead and just make sure that I catch you up to speed. I really hope that you learned something new. And if you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. NASDAQ market is in the green, but not very much. At one point, it went in the red, testing support at right around 569 and testing the same resistance right around 572 to 573 tends to be a common resistance range. As you can see, we're still seeing somewhat signs of an uptrend pattern, but it's just moving very, very slow. The question you might be asking is why? Why is the market not pushing up even higher if the Fed is about to cut rates on September 17th? At least that's what's expected. Well, today we had a series of reports that were being released. We had the ADP non-farm employment change. The expectation was 73,000. It only came in at 54,000, lower than what is expected. This does support the case for a rate cut. Continuing claims, these are the people that continue to file for unemployment. This came in at 1940 versus the expectation of 1960. It came in a little bit lower than last week. So again, technically less people filed for unemployment or continue to file for unemployment this week than they did last week, according to this report. Initial claims, the number of people that initially for the first time have filed for unemployment. The expectation was 230. The week prior was 229. We came in at 237, actually higher than what was expected. Okay, so everything is supporting the case that pretty much the market, the labor market, that's the thing that I want to emphasize. The labor market is slowing down. And if we update the Fed rate monitor tool, remember, we're about almost 2 weeks away, 1 week and 6 days from the FOMC rate decision. I will be live streaming that on this channel, so just another reason to subscribe. But there's a 94.6% probability that the Federal Reserve is going to cut rates. The more that the labor market shows that it is weakening, that can support the case for a rate cut. But if inflation, because again, we do have an inflation report next week, if inflation shows that it's rising a lot more than what is expected, then make sure that you're aware that the probabilities might lower of a rate cut, because remember, cutting rates is inflationary. And if inflation is already rising, maybe because of tariffs or whatever it is that you might want to call them, then again, the Federal Reserve might be less inclined to continue to cut rates, as again, that will only exacerbate the overall situation of increasing inflation rates. Now, what's going on tomorrow? Why do you care? 1 hour before the market opens, there are non-farm payrolls. This is for the month of August that's going to get released. The previous was 73,000. The forecast is 75,000. We will see what we come in at. This is, in my opinion, the most important report for this week so far. There's also an unemployment rate. I don't think this one's going to be too important unless it's a huge surprise. Previous is 4.2. Forecast is 4.3. We'll see if it comes in higher or lower than what is expected. This week, I feel like the theme has been tariffs, this red light, green light game that has been played of, hey, these tariffs are illegal. Then they go to the appeals court and then Trump says, no, they're not illegal. Now you have time to, pretty much appeal that they are illegal. That's been a whole issue within itself. I think the uncertainty behind that is not very encouraging for the market. But also, when it comes down to the labor market has been a really big focus for the Federal Reserve. Remember, the Federal Reserve has two main focuses. That's price stability and a strong labor market. And as of right now, the labor market side of things is not looking very good. It does look like it's slowing down. You've heard it time and time again where people are graduating with their 4-year degrees or even with experience and they cannot find jobs. Are they being replaced by AI? Or are companies simply not willing to take the risk because, again, they're actually not doing as well as they are projected to be doing? We'll see. We'll see what gets reported tomorrow. I'm just here to make you aware of the reports. I have no idea on how they're going to be reported and how the market is going to react. We all know that this market has been incredibly chaotic. Bad news has been good news and good news has been bad news. But tomorrow it is made very clear that bad news would be good news in the sense that if the labor market does show that it's slowing down, that would support the rate, the action of the Federal Reserve to cutting rates. So if the market goes up based off of lower unemployment or lower non-farm payrolls, don't think that, the market thrives when people aren't getting jobs. That's not the case. It's because of the reaction that the Federal Reserve will have when it comes down to this. So just understand that. If you have any questions about what we talked about today, please do not hesitate to either comment down below or shoot me a direct message via Instagram, which is also linked in the description of this video. Again, I hope that earned a thumbs up. If you want to watch me trade live starting tomorrow, I trade live every single morning right at market open for about 30 minutes to an hour, and we'd love to have you tune on in whenever it is that you feel like you are ready. And that's that second link in the description down below. Like always, let's make sure that we end the year on a green note. Take care, team.